Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja.
This is Cashflow Ninja. I'm MC Laubscher. Thank you so much for joining me in another episode of the Cashflow Ninja and spending your most valuable resource, your time, once again with me on the show. Thank you so much for all the support that you guys and gals have been giving me. Like I mentioned, I got great feedback from a couple of weeks ago. We did the 5-year anniversary show. I really appreciate your thoughts and your comments and your support. And just in generally, love you all, wherever you're listening to us from. I shared we're on all different types of platforms. There's actually a lot of you watching and following us on lbry.tv. Pretty cool stuff. You could download an app called Odyssey on your phone and enjoy the content through that. BitChute is another one that we're on that a lot of folks are enjoying our content on. So appreciate all of you checking us out on those platforms. Just also wanted to share, we've launched a program which I've shared before. It's called the Cashflow Core Builder. It's in that program where we share how you can be on the right side of the greatest wealth transfer in human history, which is already happening right now. You'll learn how to create your own strategy for the fourth industrial revolution. You'll learn how to protect your capital and your cash flow right now. And you'll learn models and frameworks and certain fact patterns that will enable you to fish for yourself and make decisions as things change, because they will do rapidly and quickly. I'm very excited to have on Josh McCallen back on the show, friend of the show, and back again to share what's going on in the world that he operates in. Josh is with Accountable Equity, and I've got to say the Accountable Equity community has been, it's just a fantastic community of like-minded investors that are just looking to just learn and grow their cash flow and their investments. So I've been honored to be a part of that community from the start as it rolled out. So Josh, with that said, thank you so much for coming back on.
Wow. That's a lot of power you brought into the table. And this is an honor to always be on your show. It's my favorite show. Of course, we have had you on our capital hacking a bunch of times because cash flow is king, as you always say. Thank you very much for having us.
Absolutely. So Josh is operating in the hospitality and resort space. And by the way, if you haven't checked out his previous episodes, if you go to cashflowninja.com, just put in Josh McCallen, his name. You'll find all of the different episodes that he's in. Josh, what's going on in your world in the hospitality, resort, and that niche of commercial real estate?
Well, thanks for having us. We are Accountable Equity, and we also buy these resorts. It's an interesting niche. Most people that do it, you and I, we know a lot of friends that do the multifamily world of syndicating capital, where they do the self-storage world. Well, we're the resort world. Okay. We are doing the same model of syndication, but people are buying into these resorts with us. So our world over the last 18 months has been at the tip of the spear of watching the coronavirus. Just like all of us, we wondered where this would leave us at the end. In a summary, I feel really strong about where we're going, and the type of hospitality we're acquiring is part of that quote unquote legendary wealth transfer that's about to happen. So I think we're in the right place at the right time. If you haven't had a chance to listen to one of those shows with Melanie and I on, my lovely wife, MC and I dove deep into our core values of why we do hospitality and why we felt called to it. We think it's in a nutshell, we think hospitality done right is restorative for all of us as people. We think if you do hospitality right, we say you could revive your soul. And we go into the kind of underpinnings of the philosophy of hospitality in those other episodes. And then that's kind of what got us to meet Mr. MC Laubscher, because then once we knew our life's work and our mission was to deliver authentic, beautiful hospitality, we knew then the best people to join us would be cash flow minded investors. And now here we are creating something really beautiful together. Thanks for letting me explain that history. And I know everybody, we're going to get into today's, economy. So I just want to make sure if you have a chance to listen to my lovely wife on one of those episodes, I'll have to look it up, the number. I hope you can on MC's show.
Awesome. Yeah. So what are you seeing right now operating in this space? Yeah. What's going on?
Well, I mean, today we are acquirers. We are out to acquire several properties, and we actually fell into a bit of a thought process early on, thinking, wow, this is all the negative news about hospitality means that there are going to be properties on sale and quote unquote distressed. And so we got together, we started searching, and we are finding, like CBRE and JLL, these two major commercial real estate researching and brokerage firms are reporting that not much is on sale right now. As a matter of fact, not many units are even available for sale, because with the stimulus packages and the bailout packages, most businesses are weathering their terrible economic performance, and so they're not liquidating. So what we found was that opened up a wide opportunity for us who are more nimble and smaller and can go after assets that are owned by individuals rather than massive corporations. Because remember, the big hedge funds, Blackstone and everything, they thought they would put a couple $100 billion together and buy swatches of real estate. And they, of course, what did they want? They wanted probably southern hotels down in Florida or whatever. And they thought, oh, we'll get them all 50% off. As a matter of fact, one article today I read said that they were quote unquote using the 2008 playbook. They were thinking, oh, distressed, a bubble in the economy or bump in the economy means that everything's going to be going to the lenders, and lenders are going to liquidate. So they had all their money ready. And guess what? Because of the stimulus, they didn't have to sell. And one of the crazy things I saw today in CBRE was that the opposite is true. Because they gathered capital to buy large swatches of Marriotts and Hiltons and all kinds of things, that the price on the ones available is actually going up slightly. So instead of getting massive discounts, they're paying slightly above retail because there's not enough things on the market, because everything's stable. And it's artificially stable temporarily. Yep. That's a deep dive. I hope for those listeners that aren't into this every day, I hope I didn't go too deep, but why don't I let you ask me a few questions for your listeners, MC, because I don't want to take this down a too deep of a path, but feel free to challenge me or ask me any questions about that.
Yeah. So you're saying that there's a lot of things that are not available right now. And again, we also have to distinct just here, because there's a certain segment of the market that those enormous groups with capital have targeted, right? So they're going after very specific properties in certain areas, and those might be the larger ones, very high priced rooms and so forth. So maybe you can speak a little bit on that's a little of a different segment that they're targeting. Yeah, and then also talk about the niche that you're in, where you're targeting, because you're looking at a little bit of a different world than what they're in.
And for those of you who have invested with us or been with MC for a while, he and I are partners at Renault Winery Resort and some other properties. And those are properties that have weathered the storm well, as a matter of fact, beyond well, very good, and are contrarian to the news because they focus on life events like weddings. They focus on outdoor experiences. So when we look at these assets, we are willing to look at a more eclectic pool of assets. We don't have to just buy a big box Marriott, either in the downtown or on the beach. Either way, we don't need to go after those because there's so much wealth to be made in the niches or the niches. So that's where we live. We live right square in the niche that is ironically doing well during Corona, because life events are one of the only events that are not stopped. Yep. Weddings, you hear it all the time on the news, which is one of our core revenue sources. They may have been postponed during Corona, but ironically not canceled. People keep bumping them and moving them. All of the money that goes into those deposits and contracts are still in the bank. So those targets that we're going after are really good at lifestyle experiences on purpose. And it probably goes back to Melanie and I, our heart. Our heart is in the idea that if you treat people with infinite dignity and respect, you can do a spiritual good for them. Like, you can be good to someone, but also that is primordial I always, this is our new expression at our company. We're saying we go after assets that have primordial experiences like outdoors or agriculture or water or marriage, things that have been around since before you and I, the language of English was used. So if it's been around before this current civilization, it'll be around after we're all changed into a new civilization. So we're kind of going after the assets that deliver that story. So sometimes we buy large acreage on the water. Sometimes we buy beachfront. We're targeting several of those right now. Things that are just here forever because they speak to our soul as people. And yes, that allows us to get into the niche and to outwit and outmaneuver the billion-dollar funds.
Yep. So the opportunity here is, instead of, well, let me just take a step back. When you just look at a resort or a hotel, that's just, and I always say that's just the asset. It's actually the strategy inside of that and the business model that produces the cash flow, which all the listeners love. So when you just look at a massive hotel, let's just say even on the beachfront, and you look at that, and it's just based on hotel room occupancy, maybe, and maybe there's a bar and a restaurant down there. That's a completely different business model, and that might work if you have great locations, right? Like if you are right on Clearwater Beach in Florida, which is packed now for spring training, where the Phillies are down there. Those rooms are filled with travelers and visitors and so forth. But downturns in the economy, lockdowns and so forth, then all of a sudden, they're in trouble. And your niche specifically, that's focused on other things like you mentioned, primordial. I like that, the concept of that, because weddings and so forth will drive the revenue. It's not just people coming and staying and maybe enjoying some things. There's actually real drivers of revenue from a business model perspective. So the opportunity also for acquiring more of these is finding properties that with slight inefficiencies or certain things that that they might not have the business model that you could bring to it, or other tweaks, right? Maybe you can speak to that too, because therein lies the opportunity within the niche, right?
Yeah, there's two. By the way, thank you, MC. MC and I get giddy about this because we've watched several of these properties come to life together. So he knows how exciting it is. And so do a lot of the investors. They come and visit and drink the delicious wine and stay in the rooms. But you said it perfectly. And there's a drawing that I have. I can't find it right now as I put it on the screen, but it's a gigantic lever. It's like one of those old levers in maybe an old factory. And I say, what lever can we pull to change our future? And at resorts, unlike a regular Hampton Inn hotel, you actually have levers. And that's the thing I think you're getting at too. Like, so if we were to pull the lever of weddings at a resort, we could then fill the hotel rooms. Whereas at Hampton Inn can only do whatever the market gives you. So if there's no corporate meetings happening, which they're not temporarily, they have no demand because they live on corporate travel and business travel. So they have no levers to pull. They just discount their rooms. That's it. Whereas what we're doing is attracting. So yes, you are right. We imbue an entire business strategy into our buildings. And that's why we only really want to buy things with a little bit of complexity, because with complexity comes levers. So we focus on our food and beverage programs. We focus on our weddings. We focus on we're even doing things with residual revenue now. We're taking a cue from all the tech companies, and we're doing club experiences where people just give us their credit card and we bill them every month for wine and things like that. So we're actually trying to be as nimble as we can to build business plans that stabilize the cash flow and grow the value of the asset. But it's exciting. And like you and I teased out a little bit, we're finding really cool opportunities to just imbue a new business plan. Usually our business model renovates and does value add physically, and then value add business plan as well. And that's usually taking over an asset that was conceived by, let's say, a family that's gotten older. It's usually sold by a family. So we're buying the non-corporate assets, which allows us some arbitrage there between, if they would have been Marriott's and Hilton's, they may have tried a few things. Whatever the family who built it tried is all they tried. So we get to then imbue our strategies on top of that. And usually we can do within 2 years a radical repositioning and on our way to full recapitalization for our investors. So I hope that's a good answer.
No, that's a great answer. And the other thing that I also just wanted to share, just what I've learned in this whole process in our partnership too, is the flexibility, the creativity and the flexibility that you have in this asset class. Seeing it firsthand was just quite incredible. And what I wanted to share with our listeners and our viewers is that, let's just say during the past 15 months, let's just say, or 12 months, I think it's right about that time, 12, 13 months, where you wouldn't have a lot of flexibility in multifamily, which is another asset class that I love, but you didn't really necessarily have flexibility and to get creative and solve certain things. And what I mean by that is, when there's late rent payments or people not paying, you had like all of these eviction moratoriums and so forth in there. So there's a lot of challenges to overcome, which can be overcome, right? But with this, the flexibility that there was, I jokingly said to you earlier, you don't have the opportunity to take a giant ice skating rink and put it, right on your multifamily property and have some wine around an ice skating rink, selling ice skates to skate and wines around there and some fires and so forth. So maybe if you want to speak to that too, because there was so many things that you and Melanie and your amazing team did, and you guys got very, very creative, creating demand, right? Live music, outside events, and so forth. So maybe if you could speak to that.
Who would have thought? And for those of you who are meeting myself for the first time, thank you guys. This was a shock to all of us, but during the Corona, we had to reinvent our business model because for most of the time, indoor dining was canceled, and yes, you're allowed to stay in the hotel, but what did we do? So we developed an outdoor dining experience, and that worked really well in the summer. And so, 5 acres of outdoor dining, total social distancing if you wanted to follow all the rules. And then what happens when it gets cold? So Melanie and I went into the archives of our experience in Europe, and many of you might know where I'm going with this. But in European villages where Melanie and I had a chance to live, there's these things called winter markets and winter festivals, and they're awesome. And they're usually around the holidays, but they're also going to the whole winter season. And people stand outside in the cold. And we said, wait a second. If we all have to eat outside, we should be doing something that's oriented towards cold outdoor dining. So we bought, we actually contracted with an ice rink. We didn't buy it. And a real ice rink and real staff to run the ice rink. And then that created this incredible halo effect. Wall Street Journal did a story on us the 31st of December. They did a PBS special on our Winter Wonderland. We were on the morning shows. So watch what happened there. It became a whole new revenue stream. And this is the cash flow is king thing. So if you remember, the whole principle of Cash Flow Ninja is cash flow is what the wealthy are looking for. Assets with cash flow. And what we watched, and I think what you got excited about, MC, is we watched the development of a multi-million-dollar cash flow that came out of, of course, now it's residual, right? There's already people signing up to be part of next year's program that was not in the business plan. So you say, well, did you lose anything from the business plan, which was weddings and rooms and indoor restaurants? Well, no, those are still doing well now that Corona is backing off. And now we have a $3 million bonus annually. Now, what's interesting about creating millions of dollars of cash flow on a business plan that it wasn't anticipated is it changes the value of commercial properties. And another tidbit for those of you listening, a cash flow secret, or I didn't know it when I was growing up in the business here and I was becoming a resort operator. I did not realize that unlike houses, you change the value of the asset by changing the cash flow and profits. So we potentially have added exuberant amount of valuation just by layering another cash flow on it. And this is the magic of commercial real estate. It's not based on what the neighbor house looks like it does in houses. It's based on what you and I put into the business for cash flow. And our team has done amazing. Last statistic, the year 2019, very starter year, we did 2.5 million annually. It's at the business while we were getting ready for growth. In Corona, in 6 months, we did 5 million in revenue just because of those creative outdoor concepts, even without weddings And with limited rooms, we did that much. So 100% growth. And then this year, we're on pace to do 12.5. So the growth pace has been exponential. I would say the pivots during Corona have changed our business for the better.
Yeah, and it's now opened up another world, right? Because now you look at, well, we did this, and there was a huge demand for it, and people loved it, and just going out there, people were just having so much fun, and they were coming from everywhere, right? And the other thing that's the key to the business model is historic resorts close to major market within major markets. So. Yeah, so the great thing about this is close to Philadelphia. Atlantic City is not too far away. So you had a lot of people come. There was even buses coming that I saw from Atlantic City. So people coming out and just enjoying some wine around the ice rink during the winter. So it created this enormous momentum. Which now you look at this and say, well, there's probably other opportunities, right? In the summer, in the fall, in the spring. So just that slight pivot, it was just fantastic to see that firsthand.
Well, thank you for that. But not only did you see it firsthand, I was so happy when you and the family came and spent some time with us. Thank you. And boy, you if you remember, sorry, this is just too much information probably, but I could not get off the cloud of being elated to see. I mean, we were talking about hundreds and hundreds, maybe even some days hitting 1,000 people traveling through the day, not necessarily all at once. And we're talking about the height of, the hysteria in the world. And yet people were, quote unquote, able to social distance and do everything legally. And yet we changed the entire market. I'll tell you, we really did. And it goes into the tool belt now, right? It's another lever. We call it the winter festival experience. We're going to do them at most properties as we buy these properties. It's funny. We're looking at a lot of properties right now. We have multiple under agreement, and each of them, I keep saying, what would it look like to have a winter festival here in the mountains? We're looking at one in the mountains in Virginia. We're looking at one on a beach in South Carolina. And I think, well, in the winter, how great would it be to have a beach ice rink, not on the beach, but near the beach. So it sounds like we can probably make all of them profitable.
Yep. Let's talk about that a little bit, because the environment, as we stated, is interesting. But what are some of the deals you mentioned too there? There's different ways of doing it. What are some of the things happening within the negotiations and so forth?
Great question.
Yep.
Deal deep dive, everyone. So here's what's going on in the world of acquisitions. I've heard from my friends in not in hospitality, but in multifamily, that the prices are not on sale. As a matter of fact, they might even be going up in all asset classes. Hospitality is not necessarily going up, even though I mentioned it earlier that people are seeing a slight tick up. It's just not going on sale. So to get to the table, we need to bring something else. And usually we're bringing, our sellers are passionate people. I love them all. I've met them all now, the ones that we're looking at buying, and they care about who buys it. So we're working hard to show them that our culture at Accountable Equity is based on dignity and respect. Our culture at Viva May is based on treating people with what we call love. And those two things are true. And you've known they've been true because we've been talking about them on your show for years. But it's exactly why we're getting to the negotiation table, because these families are not willing to take a major discount, but they do have to be creative. And so that's that whole principle that I've come to really understand, where there's two parts of a negotiation. There's either price or terms of acquisition. And price has been, I would say, relatively constant through this. It's not on sale as much as I thought it would be 2 years ago or a year ago, but terms are on negotiable. And that's probably because this is another interesting fact that we've come to realize. So those of you who are listening, pretty sophisticated people, you'll know when a market loses its lending facility, which in hospitality, it's on hold. Lending is kind of on hold right now. The regular banks just are like more conservative than they need to be and whatever. So you have to come up with a different strategy to make an acquisition. And a lot of it comes down to trust with the seller. And so we are finding that terms are, first of all, better for our investors, our group of investors. Terms are going to win in this time. Price would have been nice, but we'll take terms over price right now, because it probably is going to allow us to acquire a few more properties per fund than we would have been before. Interesting, isn't it? So we went into our current fund as a portfolio fund to buy several. And with terms being negotiated correctly as best we can, we might be able to come out of pocket with slightly less in order to acquire more assets. And therein lies the next part of the show, I think, is why are we so bullish on assets right now? And I think the news every day about stimulus and infrastructure and cash creation means we are bullish on assets like real estate.
Yep. No, lots of good stuff there because it's a great time to buy businesses. You have the demographic kind of play with a lot of baby boomers and a lot of baby boomers that have businesses and also in the particular niche. They're trying to sell and retire, and maybe they weathered the storm and came through the past 12 months and maybe they think that now's a good time to just move on and sell the business and retire, right? So that's one play. And then obviously in the economy, from an asset point of view, that you mentioned inflation, which is such a critical just factor in navigating this environment that we're in and moving forward. 25% of the money in the United States, the entire history of the United States was created in 2020. And what we also share is, basically how the money game works is, that the big banks and family offices and so forth, hedge funds, all those folks are first in line when there's an expansion of money supply, getting it very, very cheaply, getting a lot of debt as much as they can. How much debt do you want? As much as I can at 0%, right? And then, of course, where does that money go? It flows into assets. So it flows into real estate, it flows into Bitcoin, it flows into the stock market and so forth. So it's a great play to position yourself in income generating assets, which allows a lot of flexibility and creativity such as this to not only benefit from the factors of inflation, but also benefit from all the other additional things that you can do to increase the value of the asset.
Well, that therein lies the point. I mean, I think what we to summarize, I don't think any real estate asset class devalued what we all thought it would during the pandemic. They even said retail hasn't been as devalued as they thought it would be. Office space hasn't been as devalued as they thought it would be. Mildly devalued, they said. So if the pandemic of 2020 and the chaos of a new economy hasn't devalued real estate, what more could? Do you see what I'm getting? So if it weathered the 2020, just like hospitality weathered it in valuations, what is coming could be explosive. Truthfully, it could. And what will allow you and I to benefit from the explosive growth of real estate is, first of all, getting it now before it goes up, and two, generating cash flow to pay the debt, because the debt instruments they're the key to success in real estate. And that's an oxymoron for people who don't usually reflect on debt, but debt is what makes real estate so wealth building, because you're acquiring $20 million asset, but you're only putting out 3-4 million. So your growth on the 20 million all goes to you, the investor.
Yep.
Whereas the debt person holds their piece of paper and then gets paid off, God bless them, but they don't get the bonus. You get the bonus as asset holders. And this is why we've watched the wealth transfer you talked about at the beginning of the show. It's probably going to all end up at Blackstone, the big tech companies who are buying real estate. You told me earlier, even Zuckerberg's and all those companies are buying real estate. Wait a second. That's an indicator that you and I need to behave like the structure, the big hedge funds and private equity. We need to behave like them. So we're very honored and grateful to have so many investors that want us to be one of their teammates to help them find a way to get in on these assets.
Absolutely. Do you want to share a little bit about the Fund Capital H3 and just what's going on there? And you and I are doing a webinar for folks that are interested to deep dive in the projects that's currently going on. But if you want to share a little bit more about that.
Absolutely.
Capital H3 webinar coming up soon. It's one of those things we were just mentioning. It's an honor to be part of it. We believe we're servant leaders here. We do invest our own money. And it's just an honor to be a part of a group of investors that want to behave like the ultra mega wealth in the world, but do it for us who are of, good means, but, the middle of the world, let's say. We're not the highest, wealthiest people in the world, and yet we're touching the same assets that they want, and we're getting in on it. So H3 is one of those portfolio funds I mentioned a minute ago. We're buying resorts, and we're using the money to take an equity position. So that's an equity fund that you can own the growth, right? You get the bonus as the valuations rocket over the next few years. One of the cool things about H3 that we're going to come up in the webinar is how different it is than a lot of other funds. We are buy and hold, people. Cash flow with buy and hold is magical for taxes. It's magical for future refinance cash outs to our investors. Really powerful stuff. And I know the investors that come to us through your show all really understand that better than anybody else, because they watch the cash flow, they watch how we refinance, and they appreciate that. One little tease: in the future, you and I will be releasing some shows and webinars about ability to have debt with us. So if you want to be collateralized, that's coming out soon. And then our favorite instrument is the EIF, the Efficient Income Fund. We're going to be releasing one of those soon, where people can get monthly cash flow with tax deductions, whereas the debt fund is more of an IRA thing, because you're going to get taxed. But the EIF is cash flow with tax advantages. We can't wait to tell you guys about those too.
Yeah, it's very important to understand the game and how the game is being played. And it's especially right now, inflation, we talked about that, huge factor. You have to position yourself and your assets properly for that. Debt, the same thing. Put yourself on the right side of the compound interest equation. You could do that through cash flowing, income producing real estate. And the one thing that you mentioned, the third piece of that, is taxes. Taxes is going to be very, very important in the money game. It's always been, but even more, because we're going to see tax increases everywhere with a change in administration in the U.S. and then also globally, because I did a short little rant on my other podcast, The Cash Flow Investing Secrets, where essentially I shared ways which governments will not solve any crisis or problem. And one of the things that I shared in there is that they don't know what else to do but raise taxes. We see it in the state of New York, right, where people are fleeing, going to different states and moving because of the high tax rate environment, and now they're talking about raising more taxes in the city and so forth, because they're out of bullets, right? They don't know how to solve the problem. So you're going to have to, as an investor and a business owner, to navigate this environment, you're going to have to look at vehicles which provides the benefits of all three of those to position yourself in this transfer, because it's not how much money you make, it's how much money you keep. And it'll be very painful during this great wealth transfer if there's a massive amount of wealth transfer to your side, but you have to give off of it back, right?
It is. And it comes back to your mantra: cash flow is king. And so when we're analyzing these deals, we've got to see the potential for maximum cash flow. And some of the things you and I've talked about before allow you and I to benefit from the future of the inflation. See, when you're a cash flow business like us, inflation sometimes means we have more cash. The price of our food is going up, and people are, yes, of course, that's a regrettable thing, but they're paying it. And the price of our rooms are going up, and they're paying it. So some sides of the inflation game, when you have that much revenue from consumers, we're benefiting from massive lift, and we're riding the tailwind, if you want to call it that. So can't wait to explain that in the webinar and show you how you can be part of our team.
At cashflowninja.com/H3. I kept it very simple. So cashflowninja.com/H3 is where you can sign up for the webinar and join Josh and myself. I'm excited to dive into that and see all the great information that Josh is going to share in that webinar. Josh, thank you so much for coming on the show again and sharing your insights, your knowledge, and giving all this powerful information of what's going on in hospitality and resorts and real estate.
Looking forward to having you on our show, and we cannot wait to be back. You have the best community in podcasting, bar none. Thank you, Cashflow Ninjas.
Awesome. And thank you for listening to our show on whatever platform you're enjoying us. Again, also, cashflowninja.com/H3 is the webinar, and the program that I mentioned earlier, the Cashflow Core Builder. You could sign up for that at cashflowninja.com/core. Until next time, live infinitely.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.